Hey, what is going on, YouTube? So it's been a solid 6 months since I last started recommending brokerage apps, and let me tell you, a lot has changed since then. Welcome bonuses in particular have gotten much more competitive, and if you've got some spare cash lying around and you're planning to put that into some index funds, you might as well take advantage of some of these. In particular, I'd like to share two that I personally use for my brokerage and two that seem great but I would actually avoid. So yeah, don't put your money with those guys. More on that later. For those of you who are new to the channel, welcome. I go by Tenbagger. I'm a 27-year-old self-made millionaire investor thanks to my personal investing, and I thought I'd share some of my tips and recommendations that have either worked for me or that I would go for. Today's video is going to be a great example of the latter. Now, you might be wondering, why are brokerage bonuses a big deal? You might have seen Chase offer $500 for just depositing $5K or $15K into savings or checking account, or Citi offered $2,000 in some cases for the same amount. Fair question. The main draw of an investment account is that you actually get to participate in the market, basically earning 7% on an annualized basis in real terms, rather than a nominal amount that will just get eaten up by inflation, which would be no bueno. Yeah, I know, markets are a little bit frothy right now with the fear and greed index well over 80, but over the long term, putting your money in the bank is a recipe for chronic underperformance, and you don't want that. Always have capital tapped, ready to go. All right, with that out of the way, let's start with my first pick, Interactive Brokers. So the nice thing about Interactive Brokers is that they'll actually pay you a whole 1% for every dollar that you put in, up to a whopping $1,000 of free money. So if you had 100 grand lying around, you get 1,000 bucks. No questions asked. See, usually you need to deposit millions at the other big brokerage firms to get that same amount. I think Schwab, you only get $500 for the same 100K, and that's actually being generous. It's only $350 for TD Ameritrade, so there's a pretty big difference between Interactive Brokers and the other brokerage accounts, which goes to show how committed they are to winning your business. The other really nice feature is that you actually get to lever up your account for a very affordable amount. So unlike Schwab or Fidelity, which will charge you 7-8% for the privilege, Interactive Brokers goes as low as 0.75 to 1.58%. And that's really good. Earlier this year, I actually did what's called a cash out refinance, that is taking money out of my property at what I thought was a historically low, and by the way, it is a historically low 2% mortgage interest, and using that balance to invest in stocks during a seasonally strong October through April 22 period. What's really nice about Interactive Brokers is that you can get this leverage at super low rates without having to do a refi and pay thousands of dollars in closing costs. You just get one nice low rate, period. Now, some of you guys might be concerned that the $1,000 that Interactive Brokers is giving you isn't actually in cash, but Interactive Brokers stock. Well, let me tell you why that's actually a good thing. See, brokerages are fantastic stocks to own when interest rates are going up, which if you've listened to Jerome Powell or the Fed anytime in the past 3, 6, 9 months or so, you'll know that higher rates are coming in 2022, if not 2023. And the reason is that they make a lot of net interest income from client cash and deposits, basically the money that you're giving them. So it's a way to get a higher than market return on that capital. Now, full disclosure, I do get some money through the referral program if you decide to go down this route. But hey, they only pay out so many times per year. And more importantly, I think this deal is straight fire. I use these guys myself. Here's my account. I put in about 47 grand with them so far. And as you can see, here's the money, 470 bucks deposited right here. For my second pick, this is actually one that I've covered previously, but they just sweetened their deal considerably. So rather than paying you $200, Tastytrade will now pay you $500 for depositing just $10K for a return of 5% on that capital. Everybody has their own opinion on this, but I don't see the market returning more than 10 to 15% in 2022. So getting a 50% return risklessly just seems like a really sweet deal to me. Basically what happened with these guys is that the market for new deposits got a lot more competitive, but also them getting acquired for $1 billion by these guys helps. So they're drowning in money right now. Go ahead and take it. Link to this one as well as Interactive Brokers in the description below. Now, having said that, there's two other brokerage accounts that promise high bonuses on the surface, but I personally think you should avoid them. The first one is TitanVest. TitanVest is a venture-backed company. They're run by some pretty sharp guys, and they promise to democratize hedge fund investing for everyone. Now, the problem with Titan is that they charge some pretty high fees for what I think to be really pretty mediocre performance. They'll charge 1% of your AUM for the privilege of having them manage it, which is quite a lot by today's standards. I get their quarterly insights delivered to my email, their quarterly recaps of their performance, and let's just say it leaves a lot to be desired. A lot of their flagship holdings are in pretty generic names like Facebook, Uber, and Apple, aka NASDAQ 100 companies. And if you remember that quote from Billions,
I think Apple still has room to move north.
Really? Our investors pay us a 3% management fee and 30% of their profits? And you want me to tell them we're buying some fucking Apple?
yeah, that's kind of sort of how I feel about them. So on the surface, it might look like you're getting a great deal, getting back 10,000 for investing 1 million. In reality, they're just waiving that fee for the first year. Once your assets are on the platform, it'll actually cost you that 10,000 every single year that you choose to invest with them. Now, the second name that offers really attractive sign-up bonuses, but I think you should actually avoid, is M1 Finance. They've sweetened their deal recently so that if you contributed 50K capital, you'd actually get $500 or 1%, basically putting it on parity with Interactive Brokers. Now, the downside is, and granted, I'm no expert, but I talked to their customer service, I read through the docs, and from what I ostensibly gather, it seems really clunky to use. Basically, their idea is that they're all about pies. Each pie represents your allocation of capital, right? So if you put 50% of your capital in Tesla, 25% in Apple, and 25% in Google for a 100% portfolio, the idea is that over time, they want you to automatically rebalance this portfolio. So as Tesla shoots the moon, basically what happens is they'll sell some Tesla and allocate it into the other two investments so you have a balanced portfolio. Now that sounds good in theory, but I have two problems with that approach. The first is that I've accumulated my capital by letting my winners run, not by cutting my losses. And most people that have been successful in growth investing would agree. You want to double down on your winners, not cut back on them when valuations get high or, God forbid, put them into lower performing companies. Now, don't get me wrong. That's not to say I don't always cut my winners, but when I do, I want that to be a conscious move, right? Maybe something about the company has changed. Maybe there's another company that's really compelling that I want to put some of those investment dollars into instead. But the difference is I want to make those decisions. I don't want some algorithm to automatically rebalance them for me. And that's what M1 is doing. Now, the second issue, and in my opinion, this is the much bigger one, is the tax consequences of doing all this rebalancing. So it might not matter if you're a short-term investor and you go in and out of positions often, but as someone who only invests for the long term outside of brokerage accounts, this is really problematic. So unless you plan to hold just one instrument, such as the S&P or NASDAQ, and make that 100% of your pie, M1 basically guarantees that you won't be able to realize long-term gains, and that tax differential makes it really hard to recommend these guys. All right, guys, that's it for this one. Short and sweet. 2 picks that I personally like, 2 that I don't. Hope you find this useful. If you have any questions or technical difficulties with doing the account transfers or any questions about the promotions, I'm not a representative, I'm not getting compensated, but I'm happy to answer questions in the comments below as I personally use all of these, putting my capital and my word behind what I say, as always. But otherwise, thanks so much for watching. As always, nothing is more valuable than your time, except for maybe your money. And with that said, I hope to catch you on the next one. Peace out.